All right, so let's talk a little bit about the early part of this week. And today was, I guess yesterday into the afternoon, we started to see buying kind of slow down, I guess you could say. And it's a holiday week, so more likely to do with that than anything else. But what we didn't see today, which was interesting, is that chase melt up momentum type sweeper activity. The spec action is another, phrase we like to use or to call it, where it's short dated, smaller bets, but a lot more hectic of a pace, and you can almost sense an urgency. Like players are trying to get their hands on stuff, right? And that's usually what happens uh, as you're coming out of a correction, and players are getting squeezed. They could be short, right? So they're sweeping calls to cover their rear ends, or where a market starts to run away from players. And again, the first thing they're going to do to put on exposure is sweep upside calls and SPY and some of the bigger, larger names, high beta names. So we've been seeing a good amount of that. And today we didn't see it. But what we did see today, which has kind of been, the best thing about a lot of this rally, is that selective quality buying. In other words, they still have an appetite for risk. They're still finding stuff to lean into, right? To put a decent amount of money behind. And I was thinking about this yesterday, and even more so today, when I saw that it's kind of like the money flow was leaning towards NASDAQ issues more than anything else today. We initially thought that there was going to be just a complete rotation, right? That after the indices got a bit stretched, right? So let's pull up a chart here so we could talk about this. So after the indices got a bit stretched, right, we thought in all likelihood what happens a lot of times is you get a breather in the overall market, okay? And that rotation from those crowded areas of the market, that gap would start closing. So we'd see money coming out of a lot of the bond proxy stuff, the staple stuff, the software stuff, and go into economically sensitive stuff. Okay. If you guys remember, we went over a couple of scenarios of what may happen, right? We thought that was the most likely to happen. Another scenario would be there wouldn't be any rotation, the buying would dry up, and there would be a sharper drawdown in the market, right? If they weren't buying anything. In my opinion, what was less likely was they were going to buy everything again. And that's the most bullish scenario, obviously. But, after you had a lot of these software names basically correct off the highs, some of them a good amount, all right? And even bonds, a lot of the safety stuff also corrected. Not as much as some of the software and crowded names like that, but they also corrected. What happened was there are players out there who wanted these high growth names at a discount. And especially if you have or had no exposure to equities, they're buying that stuff as well. All right. And when you see a market do what it's doing right now, we're not used to this because this is not fresh in our minds, right? The last 2 years, we've been basically just in the trading range. Okay. But when markets are healthy and they break out, right, and they're trying to factor in, better fundamentals or an economic turnaround and stuff like that, this is not out of the ordinary. It's not even a melt up scenario in a sense. Sure, the Fed has a big part right, plays a big part in this, right? With no doubt. I am not going to even think to say that the Fed doesn't play a big part here. But what we're seeing is a day-to-day rotation from sectors to sector to sector, right? We've been talking about that a lot, where almost everything has been participating, okay? And that can go on for a while. I don't know if you guys remember, that was the hallmark, right? The blueprint of that whole QE rally, that whole QE bull market that we had on our hands before the 2000, what was that, 18 correction. Okay, prior to that, coming out of especially like 2015, 2016, even before that, I think coming out of 2011, where markets would just glide higher. You'd get these little pullbacks that lasted maybe a week, right? A couple of days a week. And because the rotation was just so sharp, it held the indices together, right? And what I mean by this sharp rotation, you guys probably know, it actually can add a little confusion and make trading a bit complicated, right? When the rotation is in effect. Because here's a perfect example. You could be, I don't know, let's say you could be in Facebook, right? And Facebook could look strong for a couple days, could be breaking out or technically or whatever you guys look at, caught nice flow. And then all of a sudden, that name can go dead. Okay. And it could be days, it could be weeks. You never know how long it's going to take for them to come back to whatever names and groups they've just rotated out of. All right. But it's not major rotation. Like an example of that's the banks right now. Okay. If you look at like the banks, which were the leaders, right, coming out of this, JP Morgan's one of the stronger ones. But like if you look at, they kind of just been fotzing around and almost ignored in a sense. Okay. And the juice has been elsewhere, right? The juice has been in healthcare, in biotech, right? Then it's gone to, a nice handful of software names, right? AMD had juice for a good amount of time. The commodity names, really haven't heated up yet, but every so often you see them come into a Freeport or a U.S. Steel. All right, a lot of the cyclical names, the industrial names, and stuff like that, the transportation names. So it's not even a sector to sector thing. That's where where it gets complicated. It's almost selectively certain names. And look here, okay? I know, I was busting chops about it, obviously, quite a few times recently. But this is a name I know a lot of people like to trade, right? And you could see like Amazon can go dead for a couple of weeks, then boom, boom, boom off a niner, and you get a rip. Okay, but in all likelihood, what may happen now, at some point, this thing goes a little dead again, and they rotate elsewhere. Right? Maybe the banks start to get attention again. And that's what's been going on, right? Facebook, we've seen that a couple times with. So, but that's what holds the market up. In other words, what they're doing out there is they're finding a place to put money to work constantly. Okay? And you never know how long that could last. It was blamed on the Fed. When we were experiencing this, something similar to this throughout a chunk of this bull market, the Fed was to blame. This is what you get with QE, risk on, money's got to find risk assets. So they're always going to look for to put money to work. Tina, right? There's no other alternative. You heard those phrases. So it was blamed on the Fed. Now, could it be the Fed again? Right, with the expansion of the balance sheet and supposedly not QE and all that nonsense? Maybe, maybe. But that's exactly what we're seeing right now. That's exactly what we're seeing right now. And yeah, and exactly, Tree. We're seeing it in the flow. We're seeing it in the flow too. The flow is not, again, initially, and I'm taking the blame, not the blame, but I'm saying that I thought there was just going to be this rotation and concentration into cyclical names. You know, then you start seeing names like Now, NOW catch flow, AMD, Facebook, Netflix caught size. That's not, that wasn't part of the rotation plan. You understand what I mean? So, I'm not complaining about it by no, hell no. You're not going to hear a complaint out of my mouth, especially off the last 2 weeks, because the last 2 weeks have been fantastic as far as trading on the long side. So I got no complaints, but it's just incredible how what I thought may be the least likely scenario, because it was the most bullish, right? I already have a reputation for being a perma bull. But that's what's been playing out into the year end. And, we'll see, how much gas is behind this thing. But here's the beauty of it, okay? Before we entered this type of climate, if you remember, and I remember a lot of you guys saying this, that, thanks, Ronchero. I remember a lot of you guys saying this, that sentiment trumped all. As much as you loved flow and sweeper activity, sentiment trumped all. So in other words, if sentiment was a little too hot, even myself, no matter how aggressive the flow may be, we were reluctant to put risk on and participate, and we'd wait for sentiment to line up again, and that's where we fire. Okay, because again, it made sense. We were in a trading range. The sweeper activity would dry up at the top of the range when sentiment got too bullish. And then, after the put buying came in on the way down, the flow returned at the bottom of the range. Now we're in a whole different ball game, though. Now we're in a whole different ball game where, in my opinion, the sweeper activity out there, for a lot of our styles especially, trumps all. Okay? Because it's all about momentum, especially when you get this constant rotation on a day-to-day basis. You need to be, right? If you're going to play, you want to be where the Momo is, right? You don't want to be sitting in a name that may not participate, that you're stuck in, or it may head south on you. You want some sort of edge, right? You want to get tipped off to where the momentum is currently, or possibly where it may be heading next. And that's the beauty of sweeper activity, right? The biggest edge, in my opinion, of sweeper activity is as a momentum indicator. Okay. My favorite part, obviously, is that institutional Sharpie type accumulation in size and select names, right? We love that. But in my opinion, as far as an edge is concerned on a day-to-day basis, momentum. That's what sweepers can show you, right? What's hot now and what the heat may be going to next. All right, so that's why, in a lot of those notes that I post, post market, I kept driving the point home that, listen, we're looking to be tactical here, right? If you want to be tactical, this is a good time to be tactical. Anything you're worried about getting caught with, make sure you have enough time, put on protection, blah, blah, blah. We know all about that, right? We discussed that. But as far as trading the now, the most important thing is to keep your eye on the sweeper activity, because that's where you want to be a part of. That's where you want to be a part of. All right. And the more aggressive they're sweeping in a particular name, especially if you can get in there early enough before the move. If you're looking to be tactical, in other words, you're looking to just ride the momentum, make some money, and lock that up. It was made for this type of flow. It was made for this type of flow, right? Because if you think about it, here's the thing too, and I'm doing a lot of it, but it's not frustrating me now because I'm also playing off the momentum. So it's kind of the best of both worlds. And that's why I'm like a little kid in the candy store, right? I'm having a ball out here now. So, but if you think about it, if you're buying with just time, okay, think about it. If you're buying names that are dead with no momentum, with time, and you're not participating in the day to day momentum, right? The day to day action, you're kind of miserable because the market's been going up and you're holding on to names that you're not going to sell anyway because you got a lot of time. So it's like you feel like you're not participating. Right. So that's why right now, like and we started initially, tucking a couple of names away that haven't hatched yet, right? That we wanted to be early on. And then the rest of the stuff out there, you know, try to be extremely nimble, extremely tactical. You want to buy an INCY, give it a little bit, you get that pop, take it, right? Especially if you're holding other stuff longer term, take it. Don't let it bother you what's going to do from that point, right? You get a move intraday, right? The likelihood is maybe if you hold on another week or two, you get more. But is it worth the risk? Right? The market's giving you that juice now. Is it worth the risk? So that's kind of where we're at right now. But like I said, I enjoy it because you're getting a little bit of everything, right? No matter what group you may like to trade, no matter what names you may like to trade, no matter what time frame you may like to trade, you're getting, you're getting a little bit of everything here. Uh, was that good that you are saying this because I've been taking? Yeah, Tree. Listen, right now, okay, you're taking profits off the table. You're getting them quick, right? And you got to be happy with that. You're never upset with that. I mean, you always are going to second guess whether you should be holding it, okay? But what people don't look at is at some point in time when there is a pull, okay, you're going to thank yourself for being tactical and wish you were tactical on the majority of stuff. Nobody understands that to catch that larger move on a swing trade, everybody just assumes there's a good possibility that it's just going to continue higher without any drawdowns or any pain that you're going to have to sit through. Right? That's not happening. If you're going to catch any decent sized move over the course of, months, there's going to be pulls that feel scary. They're going to try to shake you out, right? You're going to feel like you're going to lose all the profits you have there. You may give back a bulk of the profits you have. So it never comes easy. And that's the risk you have to weigh. Is that something you're willing to do to catch for the potential to catch that bigger move? There's no guarantee. Or do you take what the market's giving you right now, call it a day and be happy? And doing a little bit of both is not the worst thing in the world either, because that could also be an easy solution for you where, you know what I mean? As a degenerate, you don't get reeled into any one way. And that's why I'm doing that, because I'm like a lot of you guys and I can get reeled into one side or the other pretty quickly. But anyway, you probably hear the excitement in my voice, and it's not because the market's been going higher. You guys know, I'm a bull at heart, but a lot of times the market goes higher. There's no flow. I'm sitting, staring at the screen. Sentiment's a little too hot. I'm really not participating. Trust me, there are a lot of times like that. But right now, with the amount of action in individual names, and we spoke about this, remember? It's almost too much, right? It's almost like you want to own them all, it feels like. And it was so hard to see that point coming, right? A couple months ago. It was so hard to see that point coming. But we're here now. And the reason we're here now is because there was so much money on the sidelines that was concerned, worried, scared, wanting nothing to do with equities. Okay. And now you see now all of a sudden no recession, right? The fundamentals little by little are going to start to turn and they start to turn positive. And that's where trouble ends up poking its head. When you see the reasons why this market's been doing what we're doing here, right? When you see the reasons why, that's when you have to start getting a little cautious, right? When the market's going up and you're talking to yourself, scratching your head, wondering why the hell it's going up, that's the best time to be in it, right? But when Joe Schmo next to you is giving you the fundamental reasons why you should be in equities, that's where you may need to poop your bloomers and start taking risk off the table. Perfect example, tax cuts, right? Oh my God, the tax cuts, they're enormous. They're going to boost the economy, the corporate market. These companies are going to be sitting in cash. They're going to be buying everybody. This market's going to 100,000, Dow 100,000. Wait till they kick in. Soon those tax cuts went into effect, this market couldn't find its way ever again, right? We ended up in a tailspin. So that's what we're seeing right now. We're just seeing all the pieces start to come together. Yeah, and it's not a matter of are we done yet? Like, what are we done yet? Meaning what? Are we going to have, is the market ever going to pull back again? Of course. Like, you almost want at some point here, you want the bulls to get kicked in the face, right? If they do get a kick in the teeth and reset sentiment a little bit, right? And they come in and buy that dip, which is likely to happen, the bull market, this bull run can last even longer. Okay, the problem is if we get closer and closer by the day, okay, but if we run into a scenario, okay, where hedge funds are rolling, positioning now is rather than favorable, which has been for forever, now positioning is leaning to the hot side. We're going to run into a situation where there's going to be some sort of decent drawdown. There's no doubt about it. It's just like when markets bottom, when everybody's done selling, right? And it feels like the world's coming to an end and no bottom's in sight. Out of nowhere, the market finds a way to bottom. There's nothing left for people to sell, and buyers start coming in. Okay, the same thing is going to happen at some point when the music stops here. And the more they have to sell, the harsher the drawdown is going to be, no matter even if it's a normal correction. It could be a healthy correction, Cash. So here's the thing. The thing that we have to keep in mind, and again, I mentioned this in the quick post yesterday, right? Like, everybody wants to know when this is over. Like, the thing to keep in mind is when we get a healthy drawdown, a healthy pull that we still want to buy, okay, or where the music stops and there's going to be a lengthy correction or bear market. Okay, there are two big differences there. And I think what will help us determine what we're seeing is, one, the action, the flow, and two, where sentiment is, right? Where positioning is when that pull finally does occur. That's what I think are the two things we have to keep an eye on. There is nothing that's going to go off, okay, like a siren. There's nothing that's going to go off and make a loud noise and alert us to get out at the tippy top of the highs, and we nail the highs, and the market rolls over and crashes. There's no, and I'm not saying you're looking for that, Cash, but anybody who's played this game knows it doesn't work that way, right? It doesn't work that way. They always overshoots to the upside, always. If we start to see, okay, two things in particular that you guys know we've been keeping a close eye on. If we start to see the hedge funds all in and the bull bear positioning indicator hot, we have to start taking a lot of our risk exposure down. Even the stuff, I know I am anyway, even the stuff we have with time, in my opinion. All right, even the stuff with time. Okay, because again, the logic behind it is when that sell trigger occurs, there's a lot of selling that's going to hit the market. All right, that's the logic. When that trigger occurs, you're going to have a lot of people try to get out that sell window at once. Right? You got 2 billion plus of gamma building and just sitting there, right? The longer this thing lingers without some sort of healthy little pullback, eventually there's going to be a sell trigger at the top that's you're going to snowball into something bigger. So that's what I'm keeping my eye on. It's that simple. That's what I'm keeping my eye on. You know, and the other thing too is, you know, if I see like sweepers are still buying stuff, right? I'm still buying stuff. I'm telling you that even at this point, like I'm holding myself back from putting on additional risk. We had this conversation, remember? Because they're still buying, right? Just today, like Texas Instruments, April's, right? Nice little setup here off a dip, a niner. I had to buy it. I had to buy it. Okay. Then you got, you know, not really my speed because it's run, but this software name is what the hell is X? Oh Jesus, A X Y. No, we have fungal all these symbols. I swear to God. No, AYX. That's it. Right. So this already has rallied, but you know, look at the pull from the highs there. And this thing gets annihilated today, right? Annihilated. Annihilated. Somebody comes in and buys a pile of Fed calls. So, you know, every day we're seeing more and more clean action come in. And here's the beauty of it, okay? The problem is, right, like this. If they're still buying AMD up here, then you guys know, right? That's what I kept stressing to you guys. Listen, I remember Tree, you were getting concerned, right? I said, listen, I don't want to make a big deal about it. We're in expiration week. It's only 2 days, okay? But if we keep seeing AMD and Microsoft sweeps and nothing else, we got a serious problem on our hands. Right? And it's almost like they heard us complain because since then, it was only 2 days, right? Since then, they came in and been buying the living daylights out of stuff. Fed calls, exactly. Well, the thing is this, the Fed, because of what the Fed's action, right? Because of what the Fed did, they're forcing money to take risk, right, Lotto? That's in simple English what's going on. Yeah. So, you know, and on top of that, you have coming into this, you have funds, hedge funds, institutions, you name it, so underexposed to equities. It was ridiculous. I mean, we were oohing and ahhing over all those indicators and charts we were looking at showing outflows of equities, ginormous. Ginormous. I just posted one today. I don't know if you guys caught it. I posted it in the morning and then I threw it in the market update section, showing the equity outflows over the past couple of years. You would have thought we went through Armageddon. You would have thought we went through Armageddon. Yeah, I mean that again. I don't know, Lotto. I don't know if that's related to that. You know, a lot of times the action is early morning, and then they come back in the afternoon and do some shopping. You know, that's been a pattern for years now. You know, years. What is the cause of that? You know, I'd be lying to you if I created some conspiracy theory here. You know, but again, just to keep it simple, you know, I'm not out there looking for flow in a name, right? I know the best flow is going to come to me. Okay. If I like XYZ, if I want to base a bet off sweeper activity, they're going to hit it hard if they think it's something they should be in. Right. And I've taken that approach throughout this whole move. And there's been a lot of flow that's come to me, right? You want squeeze names? There's a list from here to Chicago, right? From the biggest piece of garbages on the face of the earth to you name it, Uber, right? Off a niner, throw it in the kitchen sink bottom, everybody all out, negative news to the fullest, right? Boom. All of a sudden, sweepers come in, started with time, which you love to see, right? Start hitting March calls aggressively. Then they come in Jans. Then they come in Decembers. Then now, are you chasing here? No. Is this a name that has caught 100 sweepers up at the highs and you're late to the party? No. You know, this is exactly what you want to see. Risk money fine, right? That's what you want to see the smart money find. Continue to find opportunities that are undervalued. Because there's a difference between forced buying and real buying. Okay. Players chase AMD up here. Okay. Why? Because you think we're seeing sweeps up there because the smart money is bullish AMD? Have you lost your marbles? They don't play like that. You guys know that. You got people getting squeezed. You got people who need to own the stock. You got market makers that got a hedge. You got a million different things going on. That's forced activity, right? So it's not because they want to buy it, they have to buy it. And it's going to create momentum that you can trade off of. All right. But it's not the stuff you want to start chasing when you're worried about a pullback. You want to see them come into new names, new opportunities, new setups. All right. We talk about that a lot. And every day there's been new setups. Every day. Every day. All right. You guys have been hitting me up on Twitter with a gazillion names that you've traded, you're played, you're in. You know, 3/4 of those names I didn't even play. Right? You don't like buying squeeze plays, right? There was a million squeeze plays, a million TME. The list goes on and on and on. Okay, you want to buy stronger stuff. You want to buy biotech. You could buy biotech. You name it, this flow has had it. Right? You wanted to buy FANG names, Netflix. Right? Caught a lot of action. Roku catches action. You could day trade till you turn purple in the face. AMD, we already spoke about. Facebook caught a little action, had a nice trade out of it, right? Even Amazon, which you guys were salivating off of, caught a little bit of action down there near the niner. Everything, you know, everything. So that's what you want to see. As long as that continues, the likelihood is the momentum, right? They have an appetite. As long as they have an appetite, they we want to be buyers of dips. So here's the scenario where things may turn. And this is what like the gamma gang that I keep mentioning is looking at. Okay. rather than an event where everybody seems to be positioning for, right? What is everybody looking for right now? Okay. And where would the most painful trade be, per se? What everybody's looking for now is a melt up that eventually goes bang, right? So there's eventually a play on VIX, a spike, right? There's a play to the long side on the melt up, right? So what the Gamma Gang is looking at and what could potentially happen is, instead of that, you get, when this market runs out of gas, almost like a methodical pull. All right. So you get a reversal. The market starts heading lower. Shorts get reeled in. People buying VIX, thinking the big kabang is coming. What happens? They get squeezed. All right. Longs think everything's beautiful again. Now they're hopping on longs. Market pulls back again. And ultimately, you get, over the course of days, weeks, something like that, right? You know what I mean. And then possibly you get that larger drawdown. And the Gamma Gang is looking at that as a potential scenario for downside. They're not looking for downside, but how downside may play out, because with Gamma up at 2 billion plus strong right now, okay, they think that that foundation has to get chipped away at, right? 2 billion plus strong Gamma is telling you they're buying every dip. You need a Scud missile to hit the New York Stock Exchange to make a dent in that Gamma right now. So what they're saying is, you start to see that Gamma foundation get chiseled away at, get chipped away at, and then eventually that opens up a window or some cockamamie trigger. Right now you don't need a significant trigger that will create a larger move and a volatility move. So that's the scenario they're looking at. That's why the VIX is melting, right? They feel even the VIX may have more downside for the rest of the December expiration, as it looks right now. So that's the scenario. So how do you plan for that scenario? You think that's easy? Right? Well, the way I recommend we look at what the things to look out for in a scenario like that. Like I said, where is positioning sentiment at that time, right? Where are sweepers at that time, right? Are sweepers do they still have that appetite for risk that we're seeing now, right? During a market little choppy shake, whatever it is, sort of like right here. That's how it's going to look initially. So those are going to be the things we're going to want to keep an eye on at that point. But for now, there's the most you can do now is just be prudent about things, right? Be smart. Don't chase. Don't hold everything you buy, right? If you do, make sure you put on protection, not to make money off the protection, but to protect your ass just in case something does get hit with a Scud missile. You know what I mean? Those are the things you have to look at now. You have to. You have no choice. Yeah. What's funny, Cash? I was thinking the same thing, but that biotech move lasted a long time before that ended. You had stocks going from 2 to 90. Right. Maybe it's just starting. No, but Cash was saying we had the start of this biotech move is similar to like 99, where you had just an absolute explosion over the course of months at the top of the NASDAQ bubble, where biotechs, you think you're seeing rallies now. It was like that one we saw yesterday in the aftermarket times 50. There was 3-4 biotechs a day that were up hundreds of percent. It was ridiculous. It was ridiculous. And listen, those are the signs of exuberance, right? Like even now, right? Sentiment's more bullish than it's been. There's no exuberance out there. You guys nuts? There's exuberance out there? Nowhere even close to exuberance. Right? There are people on Twitter. I see more people talking about crashes and corrections and they hate the Fed and this and that than I do bulls. There's no exuberance out there. Yeah, exactly. Bitcoin, that was exuberance at the tippy top. Exactly. Exactly. Bitcoin at the tippy top, that was flat out exuberance. Everyone was huddle. What was their mantra? Right? Huddle. I mean, come on. If that's not exuberance, I don't know what is. Right? So that's what I'm saying. And we want, like, for me, I would love some sort of pullback. Of course, I don't want to end up holding things during a pullback, but I realize now, like, I have no choice. If I'm gonna start legging into positions into 2020, which I already started doing for over a month now, right? And I have intentions of holding them, right? What the hell am I buying June, April, and all that shit if I'm not gonna hold them a month? Okay, I know that not just one pullback, there's probably multiple pullbacks I'm going to have to get caught in and sit through. Hence why I have enough time and I'm not going crazy as far as all in at one level. I want to leave some ammo if and when that pullback shows up, because I want to look to take advantage of it, right? If it runs away from me, I have something, right? I have something. So I made some decent money trading the last couple of weeks. I have a basket of swings, nowhere near what I want, but a decent little basket, and I'm going to make some money, worst case scenario, right? But if we do get a pullback and things are still looking according to plan, right? I still think that rotation's in play and we're still seeing some promising flow come in or pullbacks in these rotation names. That's where I'm going to look to put money to work and look to take advantage of the pullbacks. So that's the game plan here. That's the game plan, right? If you want to be super conservative, and this is what we've been talking about for a couple of weeks, okay? If you want to be super conservative because you're worried about that poll, I don't blame you, okay? I don't blame you. Trump can, with this guy president, anything could happen. Anything could happen, right? Anything, okay? So being conservative, I would never knock that. What the best way to do that is stay nimble, stick to short-term stuff. You feel like you're a little too long on stuff you're holding on to, put on protection, hope it goes to zero, right? You don't want to not lose any money on a pull. It's okay to lose money, but you don't want to get buried on the pull. That's what protection does, right? Degenerates, a lot of degenerates, I see it all the time. What they want to do is they want to make money on their protection. So they want to make money on a potential melt up and they want to make money on their protection. Right? And that's where you get reeled in and bad things happen. But you want to stay tactical, and if there aren't any opportunities that present themselves, right, for that you think is a tactical opportunity, then don't do anything until you see one. But we've been seeing a lot of them in a lot of different names. We've been seeing a lot of them, and we'll go over some of those names quickly right now. Let's go over some of the top bets that we saw today to start. Would I consider buying VXX only for hedging purposes? Otherwise, no. Only for hedging purposes. So here we got Texas Instruments. Yeah, puts, it depends on what you own, what you're playing. You could buy puts on the S&Ps, on anything you can. It's up to you, Yeah, you're not going to find the perfect hedge. The object of the game is to soften the blow if you're too long, not to make money on the downside. All right, so here's Texas Instruments that I was talking about. Two really good looking sweeps. April 120s, lays really nice wood. I mean, Texas Instruments is a beast, a lot of time behind it. So yeah, you may have time. Maybe you want to leave a little room to add if and when the market does pull back. But they've bought many a dips in this TXN, and more than not, a lot more than not, as far as I remember, every single one. But more than not, they cash tickets. And this dip, if this is the start of a whole new bull run, right, which no one really is kind of factoring in here, this is what you want to see here, right? This is what we were talking about. These are the opportunities. Okay, you're not chasing, you got a dip, and you may look to build some sort of position with some time, so you don't have to sweat each and every tick in the stock. Oops, a daisy. You got a one in Home Depot as well. Same thing. Like, look, does Home Depot look bad or something? I mean, look at this. Right? That's where you want to. This is where you want to buy it. Right? You don't want to. If you're going to swing a position, you don't want to come in up here, and then this happens. You don't take it, and then shoot, you're stuck now. Here's the AYX. Okay, this was a block, 450 lot. That's 1.2 million. These two were sweeps, 700 grand and another 500,000. Feb 85s. Look at the wood. Goodness gracious. That's probably Drunken Miller. That's his type of play. Yeah, you don't want to play the 85s, You just want to use, you don't have to play the same strikes, especially, names that can move around. You want to use it as a roadmap, basically. So he's going out, into early next year, February. So you want to stick around that time frame. No, I played the 120s. I was looking for another strike tree. I played the 120s to start. If I add to it, then I'll look for another strike. I couldn't figure out another strike, and I didn't want to end up forgetting about it. You know what I mean? So I just bought some, and that's it. So at least I have it because I like the action enough. Yeah, it does look good. Again, a lot of time, Trey. We got to remember that, but it does look good. And, market permitting, we probably don't need all that time, obviously. But it's good to have it, It's good to have it. So here's the AYX. Exactly. AYX, again, not the TX is more of my speed just because this egg hatched a little bit here. You could see that hasn't stopped a lot of this stuff because you have a pretty deep pull here. And they're coming in and buying these things, So, and there's been flow in a lot of these things. Like if it was just this, maybe you want to be a little bit cautious. But we've been seeing it in a lot of these names that now, look at, well, that caught some news too. So that had a little more juice to it. All right, maybe you want to wait for a dip in this AYX if you're looking for more than just a quick trade, If you're not looking to just get take profit off the table. You may want to wait for a dip. Maybe you get a better entry. It's a tough call. I'm a lot less comfortable with this type of stuff. Which one? Oh, the now, right? The now? Oh, AYX. Oh, here. Yeah, that's what I worry about with these trade. That's what I like lack the confidence in these things because like I wonder if this thing might breathe a little bit. But when you look at how deep the pull is, are you that clever to get in? See, this is like what, four? This is because this moves. This is like $8, this range. So this thing could be down $8 the rest of the week and still look the same to me. That's the tricky part here. Still look the same, right? This thing could come, right, go up and then come back down here. And you still got this turnaround. And the stock's down $8. You're thinking it's a disaster with ample time behind it. So it gets a little tricky with these things, especially when they move like that. But again, I'm here to tell you about the action. The action is Drunken Miller-like. What else we got here? This was not a bad bet. I day traded cheap stock, really didn't do too much. LGFA, that's Lionsgate, the A shares. Not a bad bet for this name. It didn't do too much. Today had a little pop and then fizzled out. This is more my speed, though. This is more my speed. This is kind of like a squeeze name here. And if you're not sold on it, I would wait and see if they come after it again. If you're not sold on it. But if you like the setup, that's a half decent bet, what they hit it with today. If they come in again for more, then you got a real quality situation. Yeah, the spot I like. DXC. I don't know why I put this on here because the bet was a good looking bet, but this is a repeat activity. So they came in, I don't know if you guys remember, they were hitting small lots on this DXC down here. And I think it actually even caught, it might have been a block of puts somewhere up here, but had a nice run here. Earnings were in the way. That was the problem. And now, all the way up here, a little bit of a breather, but off a big move off the lows. The bet, though, was a pretty hefty one. About 600 grand. Could catch size, but that's a nice looking bet. Opening activity, swept multiple exchanges, March, right? That's the definition of a real buyer there. All right. The one that I probably wouldn't put in the category of a real buyer is probably the win, meaning that this is a spec play, probably off a trade agreement or something to that effect. That's what he's trying to go after. Short dated, size wise, okay. Win can catch missiles. You guys know that. The stock is not bad though, right? Rotation name. These casinos really haven't participated much of late. They're still hovering near the lows here. They got headaches with Hong Kong and all that stuff. That's been part of the issue there. So, but not the worst spot on a down day if you do like to trade win. There's been some decent moves over the short term in win. All right, so not a bad looking spec bet. I think it caught a small bet after that too, smaller. And this was another name that I bought today, Mosaic. Just because it fits the bill of what I'm trying to do on a chunk of these swings. All right, disgusting. There's no other way to slice it. Mosaic might be the biggest piece of shit on the face of the earth. Hands down. Hands down. All right. But I'm interested in shit right now. Very interested. You got a niner here. There was a little bit of flow over the past couple of days, and today it was really, really active. It was really active. So I anticipate that the price action, the news around it is all going to be a shitstorm. I already know that. Okay. But if they squeeze these commodity rotation names, right? The commodity stuff that has been totally ignored out there, the X, the FCX, if there's a full-fledged squeeze in it, this stuff is going for the ride with it. All right. And I have a track record in this thing because back the last time, I keep using this as an example. You guys remember there was commodities was so out of favor. You had, moves in this mosaic once it squeezed that I can't even begin to tell you. And I know you're looking at mosaic now and you're saying, why are you showing me, where this stock went from 30 to 90? Okay. But guys, that's where they start, that's where they start. You know me, Tree. I bought some of the March calls. But the Jans caught the heat. The Jans caught the heat. But again, like some of the other stuff, I went further out initially, and if I think there's a squeeze in play, I can either buy the stock or come closer as far as a strike. You know what I mean, Trey? I could kind of I could go shorter from there, but at least I got some time. All right, and maybe you want to watch it, right? I mean, even if it gets a little bit away from you here, if you're not just playing for a squeeze, you don't have to worry about it. You're looking for bigger than that. But these things have been dead and no interest for a long time, guys. A long time. If there's ever a full-fledged squeeze in commodity land, then I mean, based on I've had a gut feeling at some point next year we're going to see it, and the flow has been confirming that for me. They haven't really focused on short-dated stuff in a lot of these commodity stuff yet. They've been going further out. They've been going further out in time. But like FCX, they started, if you remember, with leaps, then June, right? Then Febs, and now some even closer in. So exactly. So now, maybe eventually it trickles to the rest of the stuff out there. Rest of the stuff out there. We'll see. But all these things, I'm trying to think of an example I used on the Sunday webinar. What was the example of a stock I used that we never thought, Ryan, it would be near new highs? It was one of those freaking names. It was one industrial or something like that. I forget. But yeah, these things, they start from somewhere, and it's a big trend change. Now, GNRC, that's a little cuckoo. Look at this. This used to be a hurricane play, and then California went under, and now this thing is like crazy. Jesus Christ. Yeah, URI, all those things, they've been clawing their way back. But a lot of these things go through phases. They go through cycles where, they're down here, right? Look at URI, $5, $6, $10 down from 50. And I'm not saying I'm going to catch a move like this, but if you got some time and you catch 1/8 of that move, you're going to make some money. So, that's the risk reward there. That's what's appealing there. All right. But if you're looking for a squeeze, keep an eye on the flow, a short-term squeeze, because this thing could by accident go to 22 if it catches flow, accidentally. So it's definitely squeezable. What else we got on here? Anything else I got on here? That's it, right? That's it. There were a ton of other sweeps out there. Again, I just picked a handful. that I was the most impressed with. Yeah, Honeywell caught a sweep. That's not a bad setup out there, right? Little breather off that. This is a strong name. This is a good looking name. But your industry looks good. It's been strong, obviously, looks good. But I really don't have feel, as far as uh, rotation or, my short term stuff. It depends. Like if I have a good track record in the name, like I'll give you an example, INSEE, right? That's not my type of setup. But these INSEE sweepers have treated me well in the past. I've day traded it and have regretted every time I sold it for a day trade. So, caught a sweep. It's rare in this name. Biotechs are on fire. So I'll give it, give it a week or so and see what happens. So I'll make the exception. But more my speed for the short term trades, you guys know, is dead, and you get the lift. And I look to sell into that, for quick swings. Day trades, I'll day trade anything that's getting hit with aggressive activity. I love the squeeze stuff, but everything. Yeah, this Disney's unconscious, crazy. But John, that's the thing. Like up here, it's for as much as like you may not think it is. It's forced buying up here. It's forced buying now, right? Players and funds and all that stuff that need to show Disney some exposure to Disney on their book are forced to buy this thing and chase. In a way they want to own it, but it's obviously not an ideal spot they would like to own it, right? So that's why we're seeing just action. There's a lot of momentum. There's a lot of juice in it. A lot of juice. And here's the thing too, right? Here's a good example, Ryan. We were looking for one. Here's a good one. How, Disney was hated. Nobody wanted Disney. This thing was stuck in consolidation for how long, right? Look at this. And now everybody wants to own Disney now. So things change. Things change. And that's the beauty of the action. The sweeper activity sometimes will tip you off. ZS, yeah, that's interesting too, all the way down there. But I probably would have did what you did, Trey. I probably would have just yanked it if I was in it off the run. That Coop, which looks a lot healthier, caught some sweeper activity. Look at this. This thing didn't even pull. You got a niner here, though. A lot of things are running right through them. There's a lot of strength out there. A lot of strength out there. What other names? What other names you guys got? How about biotechs? Let's talk about biotechs for a second. Okay. There's been some heat in biotech land with sweeper activity, without sweeper activity. We spoke about INSEE. One that I played with a couple of you yesterday was this AUPH, which had a really nice day. I trimmed that today. I was in the other ones. I was in the first line, the second line they swept. I forget the number, but they were sweeping a cheaper line prior to that. I didn't play that line. I played the closer to the money line, the 7.5s. And what I did was I took chips off the table and I rolled a piece up to, what strike was it? I don't remember, but I'm still in it in a small way. But I had to take some of it off the table. What I was contemplating buying, believe it or not, I wanted to see a little more action and they didn't give it to me, was this AKPA. And then it kind of like ran away from me. I was going to take, instead of rolling up, just sell AUPH and buy a little of this. So that's what I've been doing. You see, like INSEE, I took that off the table. I bought some AUPH. Today I took the majority of that off the table. So I was going to buy a little of this AKPA, see if I could get lucky off that sweeper activity. And I didn't do that. Blue, right? A lot of you were looking at this thing, right? This thing is dead and buried. This is not a bad spot down here. Wasn't the biggest sweep. Blue can catch a decent sweep from time to time. Hasn't in a while though. But I would definitely keep an eye on this blue if you're interested in the name. Do they have any stuff going on? Any FDA dates to keep in mind or anything like that? I see you guys talking about some other names here. Gordon's talking about KL. That's a gold miner, right? I was talking about Lotto. I've never had a lot of success in gold miners. Okay, and two, some of these gold miners look interesting. The problem is, if you're bullish market, then gold, I'm bearish gold. And then what? Can gold miners rally without gold? You know what I mean? There's a lot of, it's almost like the energy names, the gold miners. I never have any luck with them. I told you a story. The last gold miner I had a decent sized position in for a swing position, okay? I took a hickey on because they warned about profits. The last thing I thought of bite me in the ass was being in a gold miner and then warning about profits out of all damn things. I didn't even know the company has revenue, let alone profits. And I took a pretty decent sized hickey on it. There was some nice action in it. And honestly, gold miners, they're just tough. They're just tough. So yeah, like if I'm gonna trade off the momentum, Lotto, like we were talking today, there are names that catch nice action, like PAAS, that is it AU? Some AU something like that. There are a couple names, AG, right. There are a couple names that catch some nice action when they have momentum. But that's the most. I'm done, building position in miners. I would play the ETF if anything. Honestly, I would play the ETF if I was bullish gold miners. Like I know Lotto is buying takeover targets, Gordon, so he's looking at it a little differently, right? He's kind of being a stock picker within the group and not necessarily worrying about gold. But that's what I worry about, you know. So you see, like gold kind of topped out, and this thing actually was looking pretty okay until this happened. But usually they get stuck if gold is not participating, the majority of them. So that's why I kind of shy away. If I'm bullish gold, I might as well just buy gold. But that's just me. That's just me. Yeah, and I've got burned a lot of trying to play that too. Like silver is more economically sensitive, so it should do better. But it kind of like moves with gold. Maybe it outperforms a bit. But you kind of get stuck in these like this here. Look at this. And I don't want to be long gold for two reasons. One, the Sharpies are still short out the ass, right? They've been that way for quite a bit now. And the sharp money I'm talking about, yeah, they haven't covered anything. They haven't covered a thing yet, Trey. And if that fear bubble ever officially burst, you see, that didn't even happen yet. We didn't even talk about that on this webinar. Treasuries still have a bid, right? Treasuries were up today and yesterday. If that fear bubble ever burst and you officially get all out risk on, gold is going to get hammered. So that's a risk that you got to be careful of. Now, you may not think that a total risk on situation is going to happen. That's a different story, but it's tough. Maybe as a hedge, that's how I would look at it. Maybe hey, those of you who are looking to hedge a little bit, worrying about something larger than just your run-of-the-mill pullback, maybe you buy some gold. I know, I agree with you 100%, Lotto. Fundamentally, right, it looks like it would be impossible to get to that risk-on scenario. But I've seen crazier things happen. Yeah, something outrageous like that. You know, I've seen crazier things happen. Like, is it that far-fetched, Lotto, for this thing to come, back down to earth, down into this trading range again? I've seen a lot of shit in this game, and that's not that far-fetched. Especially where everybody's all in up here like that. And I mean everybody. Everybody, their mother, their sister, their brother, and their uncle is all in up here, a la Bitcoin. That was exuberance. No, that was exuberance. So, we'll see if that happens. And what it's doing now, this is perfect. Because it usually doesn't just blow up. Kind of like that stock bond ratio we're eyeing, right? You get a little of this, a little of that, and then out of nowhere, one day, you don't expect it, you get whoop, and the market breaks out from a little base or a little pullback, and you see that huge spike in that stock bond ratio chart we were looking at. And that's where the real fun happens. That's where the real fun happens. But we'll see if we get there. What else? Good names, good questions. Kalanovich, the last I heard, is just that how much he loves the cyclical rotation play chain. Every other day, he's posting another one of those rotation charts. Like he posted another chart kind of similar to somebody else posted. I showed you guys yesterday. Basically, commodities to stocks, the biggest spread ever. And, any little reversion to the mean there would be huge. So he likes all the stuff that's been out of favor into next year. He thinks it didn't start yet. Put it that way. It didn't even get started yet. So that's the last I heard from him. Nothing new. All right. Anybody else have any interesting? I'm trying to think of. Let me hold on a second. Some other names. I'm kind of fried. The end of the day here, I'm more prepared on those Sunday webinars. I'm kind of fried. I can't remember symbols. Hold on. A lot of times I just throw them on the bottom of here so I can remember them. Any other things at play here? Hold on. Jemiah, that was another one. Anybody play that for a quick hit? Jemiah? This thing had a nice move. Squeeze. Junk. CC, same thing. I think in that commodity arena, and kind of like the one Lotto is eyeing that I'm also interested in, Meow, MEOH. I think that was down today, right? Yeah, that was down. Yeah, these things, they didn't get going yet, Matt, They didn't get going yet. And I think that initially you have, we were talking about it. Basically, just what you want to see the lows hold, obviously, and you want to see some improvement, right? That lower high scenario doesn't have to be exact, but you know what I mean. Some improving price action that the lows may be in. And then I think once you start seeing flow in these things, they can get hot quick. I don't think they're ready yet because we're not seeing enough spec action in enough of these things. In other words, sweepers aren't signaling to us that these things have the momentum yet or are going to have the short-term momentum yet. You know, a lot of this stuff they're still buying with time. They're buying into next year. So I think, you know, like we've been talking about, I think this commodity play, okay, for like to be realistic, to really get paid on it, right, in a decent way, you got to expect at least into the end of the first quarter of next year, right? Towards like the mid to end of first quarter next year. You know, maybe that's the rotation after New Year's we get back, and if we're lucky, maybe boom, they hit us with that rotation. But I think it's more of a 2020 play that we need to start looking at now. You know, we need to start looking at now because just because it's a 2020 play doesn't mean that the stock has to crash from here till they get hot. You know, they could be in these choppy uptrends, kind of like Ryan, what we were talking about with X, kind of like this. See how X started off here, right? Kind of looks similar to Meow and CC and all of them, right? All right, rally, crash back down. Rally, crash back down. Oh, this rally's for real, crash back down. This rally's for real, crash back down, right? But all in all, what's it doing? A lot different than what it looked like here, right? And then once people realized that these things were improving and the lows were in and they didn't own them, ta-da! Of course they're scary. That's why the upside is there, Tree. You know? That's why the risk reward is there for options. Like to me, they are the best longer term option type plays, right? Options, they're made for risking a little bit of money, but a really nice reward at the end of the tunnel, right? That's what options are made for as far as a directional play. Like I know some of you nut jobs day trade options and do, you know, that to me that's like insanity. The way I was brought into this game, day trade options was, you know, like options. If you ask me like what's the purpose of options for me as a directional play, that's what it's for. You want to place a bet, you want to control your risk, right? That's the only way to do it. Options. If you buy FCX and it goes to zero, you can lose a lot more money than you would like. But if you buy FCX June calls and you want to risk just what you put into those calls, it's very easy. And there's no stress. That's your stop loss. You know, that's a very easy way to play it. You want to get more aggressive, right? Add names, add different things to your basket. Right? You can still size up, yeah. But just like you would put a stop loss, that's what you're willing to lose on that bet. Right? Maybe you're willing to lose a little bit more over the course of 6 months than you would be on a day trade or a weekly. So that's where I think that's the allure here, Trey. That's the allure. Because again, for trades, there are trades everywhere. You know that. You know, you can trade anything. AYX, now, Facebook. You know, as long as they have momentum, you could get a trade out of it. But risk reward where calls, and that's what Kalanovich is talking about, Trey. He's saying that the calls right now, they're giving them away. There's no juice there. So once you start getting in the money on these calls, right? Once you start getting in the money on these strikes, it's all gravy. You're going to get paid. And if this ever happens, you're going to get paid even when the stock doesn't move because of the juice. You know, we're used to getting in when IV's jacked. We're getting robbed. We're getting robbed, right? You're buying Netflix calls the week of earnings. You're getting robbed out the wazoo. You don't even realize it. So there's value there. I'm not just trying to sound like a Warren Buffett geek, but that's the allure there. You know, no stress. You buy. You put up what you're willing to lose. It's a bet, but the reward is there for you. So, like if FCX, like for example, Trey, if you take FCX, right, and you make 6, 7 fold on your money, you know, it makes up for a lot of potential losers in that basket. And the likelihood is a lot of them are going to move with it. So that's the story there. That's the story. But yeah, going back to the point, they all look the same to me. All those names that you're mentioning in commodities all look to me like this. That's what they look like. You know, and the chart doesn't do it justice, right? It doesn't look too scary, but if you bought X over here, I remember like it was yesterday, guys. How about this? I remember that we just started the steam room around that time, not too long, and X was catching missiles over here, missiles. Like you know, a lot of you never seen action like this in X. $1 million missiles. Okay, so obviously with time behind it, okay, with a good amount of time, similar to what we're seeing now in some names, but much bigger size. And a lot of people got junked up and tailed the action, right? Because it was a similar setup like we're seeing now. And I remember we used to do a weekend webinar, and every weekend, I used to get bombarded with X questions because every weekend it felt like this happened. And the same thing. Oh, X, what do you think? All that money in those calls and it's done? Oh, all the money. Yeah, nonstop. You know, and the same thing that, you know, it's still early now, but the same thing back then where, you know, this is normal price action. These things didn't get hot yet. You know, and then fast forward, everybody was complaining that they sold X too early. That's how it usually goes, right? They couldn't sit in it while they were in it, but then they complained they sold too early. So, but yeah, that's what's there right now on the majority. If you don't want to be a part of that yet, there's other stuff to trade, guys. You know, I wouldn't be trading Meow and CC for trades. I wouldn't be doing that. You know, I wouldn't be doing that here. We're not seeing the sweeper activity for that anyway. You know, go where the heat is. Like here's another one. I bought this one too with time, by the way. But here's another one, okay, that they're buying, okay, and they're buying a little aggressively. They're buying Junes. They're buying June calls on this $3 stock. You know, eventually, if this thing warms up, you're going to see short dated action on it. We've seen it in the past when this thing went nuts. You know, but now they're starting off down here, right near the lows, with a good amount of time behind it. So I wouldn't, you know, if you're going to look to trade something like off action like that, you got to put a stop loss, you know, because the momentum might not be there. That's why they're going out to June. I bought some of the Junes just because Tree. I don't want to be bothered with putting a stop loss anywhere, you know. So that's why I bought some of the calls. But yeah, it doesn't matter. Like these cheap stocks, I'll buy calls. Oh, see, you got the same answers I got. You're asking me. We're on. I should be asking you. We're on the same page. What I'm doing, John's asking, am I trading mostly rotation names for positions that I'm willing to hold through the end of the year into next year, through a potential pullback, are solely rotation names. Okay, now rotation could be a variety of things. Doesn't This is commodities we're talking about, you know? But rotation names, URI is a rotation name. In my opinion, Texas Instruments, in a way, is a rotation name. You know, so there's a lot of there's a lot behind the rotation. Exactly. So, but what I've been looking to do lately, and that's, we've been talking about it because we're seeing some action there. The commodity names, I wanted to start putting some away, start to get the ball rolling there a little bit while they're still dead. Because, like I said, if I don't buy them when they're dead, I never end up owning them. Now, Tree, I don't know the market as much as you think. I've just been around the game a long time. I've been around the game to over 20 years now. You know, that's a long time to play this game. This game can drive you nuts in 2 years, let alone 20 plus years. Like, I got into this game 97. I was Series 7 licensed in 98. That's a long time. I've seen a lot. I appreciate that, Trey. Veil, yeah, that qualifies without a doubt, right? Valet is the proper pronunciation. And even this valet doesn't even look too bad, right? I remember this thing was scorching hot. When was that? 2016? Must have been this year. But yeah, valet definitely falls into the category. That's the other thing. You like a name, I may not like it, Ryan may not like it, Tree may not like it, but if you like one of these rotation names that catch a little bit of flow, everyone's going to have a different opinion. The majority of them should move together. You don't want to have all your eggs in one basket in one name, obviously. You kind of want to spread it out a little bit if you're looking to make that type of play. But yeah, they should all participate, barring any awful news in a particular name or something. They should all participate. I haven't got any Boeing questions. Where's Boeing these days? So still stuck here, huh? You guys like Boeing? I tell you, if you see a sweep in Boeing with some time, we already saw some decent action in it. But if you're eyeing Boeing, I would definitely keep an eye on sweeper activity. See how quiet it's been in Boeing? They're not always around. Really? Boeing's down now? Oh, so that's even better. You want to see some action tomorrow, Gordon, and then pow, poo, ping. Sweepers into Boeing weakness are gold. Ask Tim. He's made a living off it. He's made a living off it. All right, I got my wife calling me here, people coming in, Thanksgiving. Somebody give me a nice shotgun so I can put it down my throat. We got the holidays. We got a half a day Friday. We got, I think we got a full day tomorrow, right? Full day tomorrow. But the action might be dead, so we'll see what happens. All right, guys. Have a good night. If I don't see you, if I don't speak to you, enjoy the holiday. All right? Enjoy your Thanksgiving. I'll talk to you guys soon.